Welcome to TradingHighProbability.com. Today we're going to take a look to see what happened yesterday and where we stand on the weekly charts as well as the daily charts. Let's go ahead and focus on our SPY, our SPDR, the S&P 500 ETF index. And here you're going to see this long down purple candle. I highlighted this candle and put this into the program to highlight the area of this kicker, this reversal signal that is typically so strong that works out around 95 to 98% of the time as a reversal. Let's take a look at first this wave count. Here you'll see we have wave 1, 2, 3 is typically the longest wave, 4, and 5. Fifth wave in the Elliott wave series usually completes the wave up. This 5-wave pattern started towards the end of January on a daily basis. Now this doesn't mean that we just may not have a simple ABC correction down and then starting a new wave back up. What happens here is that this candle here, after this type of pattern, gapping down from the previous day's close into its open, is indicating that the bears are stepping in. They didn't like the news that was presented to them in pre-market hours and continued the sell-off throughout the day. This is changing investor sentiment. This is not the same sentiment they had the day prior. Now, we talked about in the newsletter the last day or two that we're nearing and so close to touching that 61.8% Fibonacci level. It doesn't mean we have to touch it. It just says that we're close and most likely that we're looking at some type of correction or pullback once we get to that level. Now, this pattern has occurred previously. Let's take a look at the Qs. Now, the Qs are also, the NASDAQ is also having this same type of pattern, the same indication. Let's back this up to 2007. I'll go back in time. That was in 2008. And here we are in 2007. Look at this right here. Let me just point this out to you. Let me just get my handy dandy tool. And right here, there's the kicker. And here's the kicker again, even lower, indicating that we're ready for a reversal. Doesn't mean that it's over in the bull run, but we're going to look for a major reversal, and it should. The next day should not retrace beyond the current purple bar's high. If it does, it's over, it's negated, get out. Put your stops right above this. And sure enough, what do? We sold off. And of course, this day before marked the high on October, what was this, somewhere the end of October 29th, 30th. And sure enough, we sold off right after that in 2007. I could show you time and time again. Let's take a look at, let's call it GE. Here you'll see GE. GE on October 3rd gave that signal. The high the day before was at 42.15. I don't think we've ever seen it come back up to 42.15 ever since. I could just run through this really quick, and we have recovered a lot with GE being down from $5. And again, look at this, another kicker. So will this hold true for a second time in a row? No, more than second time, but 95 to 98% of the time we found that this signal here is the end of that bull run. So as we're saying that we have moved down 70 degrees, and at this point we're moving back up at a rate of a 60-degree incline. That's just unsustainable, and we're almost at that 61.8% retracement. Let's kind of zoom in here and take a look at our weekly wave count. Notice we have wave 1, wave 2, wave 3, 4, and now 5. The fifth wave usually finishes that wave, and we now are looking for either an ABC correction down, or we might just have a new wave 1 down, 2 up, and we can retrace this 60% incline. Let's go ahead and take a look at our chart going back to right before the drop, and let's look at its Elliott wave pattern. And here we can see we had wave 1 down, wave 2 up, wave 3 down, 4 up, and the fifth wave completed its downturn. Wave 3 is always the longest wave of the Elliott wave series. So as you see, we completed our fifth wave down, and again wave 1 up, 2, 3, 4, 5. Will this get a little higher? We don't know yet, but it is starting to run into this 135 period moving average that we have drawn here. So this will act as resistance if it does decide to turn around and not follow through with that kicker signal. Coming back and looking at our daily chart again, Friday, after we saw this towards the in the afternoon, this kicker that formed, we sent out an alert to all our subscribers, letting them know that we're taking off any possible long positions that might still be in play and taking our profits. You know, we don't want to get greedy, and we're looking to short the market. In fact, we put on a short on the spider, and we'll probably add to it as the market starts to drop next week. It could consolidate for a while, but that'll just give us the ability to add to our positions, just to confirm our belief that we've seen the top. We might, bounce around within this purple bar, sideways for a day or two, but that's okay. And we'll look to add to these positions and look for those newsletters throughout the day and our updates at night. So for now, hopefully you took off your profits, or took your profits and took your longs off, and have a great weekend, and we'll look to touch base with you on Monday. Thanks. Bye.